Hey everyone, Christian Baldwin here again with Black Diamond Mergers and Acquisitions. Today I've got a great topic for you, and that is IRS tax transcripts. What is that and why does it matter and why do you care? Well, let me tell you. If you're doing a deal that involves the Small Business Administration and your buyer slash borrower has to submit a lot of forms to the SBA. Okay, so pay attention if you work at a bank. As a part of that process, you would be pretty well aware that you have to request a tax transcript on the business being purchased. So that's the selling entity. Now, it seems that the IRS has two different systems. One where the tax return information goes, and the other, think about it this way, is where the tax transcripts live. So as a lender, when you submit that third-party request to pull information from the transcript system, the report you get back should jive with what was submitted on the return system to the IRS. It's the reason that this is there in the first place is to make sure that the information that the taxpayer submitted and is telling you on the return is what was received by the IRS. Okay, most of the time it comes back no problem, or if there's an issue with it, it can be easily addressed. Like, for example, maybe there was an amended return and something's off there. So you have to make sure that the information in the tax transcript, which is usually the non-amended version, matches the correct one that was submitted. Stuff like that is more common than not. Now here's something that's not very common and it's not very well known. On the transcript system, when you look at a return that has Schedule C's, the transcript doesn't actually say Schedule C's. It uses the verbiage occurrences, and there's only 3. So if you have, let's say, a 1040 return that was submitted to this part of the IRS like normal, and you have 1, 2, or 3 businesses that report on that Schedule C, they should match the occurrence 1, 2, and 3 on the transcript that's delivered. Here's where the problem gets tricky. You have a business owner that has more than 3 businesses or more than 3 business reporting entities, so 4 or more. There's not enough room on the current system to handle all those individually. So what happens is they take one Schedule C on this system and they match it to one occurrence. And they take another Schedule C and they match it to the second occurrence. All of the number Schedules C's that are 3 and more get lumped into occurrence number 3. So if you have 8 Schedule C's, then you've got one occurrence with 1, the second occurrence with 1, and 6 are consolidated to the third occurrence. So you have to add those up and then make sure that all those different line items that are reported are correct. What if they're not correct? Or what if it seems like it should be correct, but you can't figure it out? You really have to manage that part of the process really diligently. You've got to get the accountant involved to understand what differences may be there and why. Sometimes you have to talk to the lender to make sure that they understand what was submitted and why. And in the unlikely event you still can't figure it out, you may have to escalate that through the IRS or other government channels. And you all can imagine how fun that is. Anyway, I hope this is a little bit educational for you. There's some definite nuances when it comes to understanding the tax transcript system. Admittedly, we don't even understand them all 100%, but just knowing that that's how the occurrences are built, hopefully that'll save you a little bit of headache in the future. If there's anything we can do, let us know.